Hello traders, welcome back to new video in our exciting series. I am Sanjay from Thrive International and I am thrilled to continue this journey with you. Thrive Hub, where financial empowerment begins. This session is powered by Thrive Hub, a place for all financial education, an initiative by Thrive to empower traders with knowledge, tools, and community support to excel in the financial market. Today's topic is bar counting and trading setup. So, in the first part of this video, we will understand what is bar counting and how you can use it to understand the end of pullback and utilize it to get trading signals. So in first, let's understand what is a pullback. A pullback is when the price temporarily moves against the trend. For example, if the market is moving in an uptrend, then it can briefly moves in the downside. That's called a pullback. So in this example, you can see this is a very good uptrend going on with some reasonable pullbacks, means this small down move against the original direction. So what are the minimum requirement for one pullback? So the minimum requirement is pullback occurs when the current candle breaks the low of previous candles. So in this example, you can see here that in an uptrend, this red candle has broken down below the low of this bullish candle. So we can call it as a pullback in the existing uptrend. Whereas a doji bar forms up, and even if it does not cross below the low of the previous bar, it is called an implied pullback because it's a big pullback on the lower time frame. If you see this doji candle on a smaller time frame, then you will gonna see that the previous candle's low has been broken down and it might be looking like a triangle on the short term time frame. So that is why any doji bar, even if it does not cross below the low of the previous candle, it will gonna be considered as an implied pullback. Okay, so this is what pullback is, a adverse movement opposite to the original direction of the trend. Now let us understand key characteristics of pullbacks. So the first characteristic is minor corrections. Pullbacks are usually short-term price decline in an original uptrend or downtrend. So these will not gonna be very much big in terms of downfall. They will be comparatively short in size and duration in comparison to the original uptrend moves. And second is volume changes. The pullbacks will usually have low volume compared to the volume an uptrend, or the, you can say, the major trend is showing. So the major trend direction moves will gonna accompanied with higher volumes, and pullbacks are usually on very low or dull volumes. Third is trend continuation. After these pullbacks, the market typically resumes its original trend direction. That is why they are called pullbacks or retracements. And the fourth one is these pullbacks are a very good opportunity for left out traders to enter in the direction of the original trend. So anyone who has been left out from the entry when the original trend started, so these pullbacks give them reasonable opportunity to enter at a very favorable price instead of buying at the very high prices in the uptrend. So let's say if the trend is moving up like this, so instead of buying at these high level, a pullback will gonna give you an opportunity to enter at these fair values, and then the trend will resume itself. So the risk of buying at very high level will gonna be mitigated if you are using pullbacks to enter in the original trend direction. Let us decode this chart step by step, then we will move on to bar counting concept. So here you will see that we have seen a very big or robust down move initially, and then this down move has slowed down in the form of this range. Initially it was just a pullback, but what happened after some time, when the downtrend started to resume itself, what happens at this time, this down move was very slow and dull. You can see the candles forming here. These are overlapping each other, or you can say like 6 to 7 candles have been formed inside this big candle here. So we are seeing more of a sideways market here, and then finally this range got broke down and this candle closed bearishly. But after few more candles, the market stopped to decline, and then it resumed its up move again towards this high. And after a small range of 4 to 5 candles here, the market broke out above this previous resistance range, and this point will gonna be marked as a higher low, because this low is formed. So this swing low is higher than the previous low here. So that is why we can say that some kind of uptrend might initiate from here. And once we have identified that this is the initiation point of a new uptrend, so from this point it moves up and then started to form a pullback. So this pullback has stopped at this level and started to move up with some range and then continued to the upside. So how to predict this is the end of a pullback? One way is to use trend lines. By connecting these previous two swings low, you can identify that this is the support area. But relying on only trend line would not gonna give us high probability setup, because many times the market can break below this trend line, so we might see a failed trade here. What we can do is, by applying a bar counting method here, you can initiate with some more confirmation. You can enter in the original trend's direction with a little bit more confirmation with the help of bar counting method. Or if you know that when this pullback is going to end, then you will have some more reliability there, some more confidence there, right? So bar counting method gives you a way to count the bars in the pullback. So the concept is like this. You see, this is the highest high candle here, and this next candle has broken down below the low of this previous candle. It formed two inside candles, okay, but none of these candles from this highest high bar, none of the next candles have broken out above the previous candle's high, but this bullish candle has broken out above this pullback or this last candle's high. So you can say this is a high one concept. Just remember it as high one. Alright. Again, we have seen a minor pullback going on here, and this bullish candle has broken out again above the previous candle's high after trading in range for 3-4 bars. So this is again a high one candle, and when you have entered based on these high one opportunities, it have given you this much of opportunity, and the trend has continued itself on the upside. But at this point it started to form a second correction. Okay, closely watch this bearish candle, then next inside bar, then again a bearish candle, a inside doji bar, then again a bearish candle at last. Then we have seen two inside bar here, and this bullish candle is breaking the high of these previous candle. But till now, till this red candle, none of the candle has broken above the previous candle's high, but this candle did. So you can say this is again a high one entry here, and you can see how much good this up move has been, right? So high 1, high 2, high 3. These are some ways to count the pullback bars in an uptrend to know that when a pullback will gonna end it. Alright, we will see its characteristic in much more detail and what are the factors that you need to consider. Not only counting high 1, high 2 will gonna work, you need to know some rules about it to have a perfect entry opportunity there. Bar counting. Bar counting is a useful concept to identify the end of a pullback in a bull trend or a trading range. So whatever we are discussing here for bull trend will gonna be applying as it is in bear trend also. Like we understand a head and shoulder pattern and we know how an inverse head and shoulder will gonna work automatically. So this is as simple as that. So moving ahead, high 1 buy setup. So how does a high 1 buy setup look like and what are the conditions for it to fulfill? So high 1 buy setup in a bull trend, first of all you need a uptrend as these two candles are showing you. Then a pullback will gonna occur in this major bull trend. You have to closely mark this high candle first. So this is the highest high bar formed in this structure, and from this bar this pullback has started. Alright, and then we need to see that which candle is breaking the high of the previous candle's high. So here you will see this is a signal bar when this green color bar crosses above the previous candle's high. So automatically when any candle crosses above the previous candle's high, this candle will gonna become as signal bar, and this next candle which is crossing above will gonna become as entry bar, and this is what we call high 1 entry because this candle has crossed the high of previous candle. And in robust uptrends, high 1 entry is the perfect opportunity to enter in the direction of an uptrend. The logic here is when we were in an uptrend, many candles were forming new highs, but once the pullback has started, these two candles, these two red color candles have not been able to cross the previous candle's high, and when it does cross it, then we can say that buyers are coming into strength again. Alright, and this will gonna be in a very good robust uptrend only. So you can see the first bar whose high is above the high of the prior bar is called as a high 1 entry, and it ends the first leg of the sideways or up move. So we are seeing here as first leg up, a pullback, and this high 1 shows the end of this pullback, and then we are again resuming in the direction of the uptrend. Very simple, right? One more variation is there, which is high 2 entry. Okay, high 2 buy setup looks like this. We have a normal high 1 entry forming around this point, but this high 1 get fails because in healthy trends, you can say, we have discussed that in robust trends, in very good bull trends, the high 1 entry will gonna be very much perfect, but in a little bit weak trend, or you can say a healthy trend, will gonna give you two pullbacks. So this is pullback 1, high 1 entry triggered, but this has failed and the market formed a new low here. Okay, this new low is lower than the previous low. So this is 2 leg pullback, an ABC correction. When second time a previous candle's high is broken out, this will gonna give you a high 2 buy setup, and this is much more reliable in healthy trend because this pullback is ABC correction wave. ABC correction is in Elliott waves. We will gonna discuss it in separate video in detail, but this ABC correction is pretty much normal in the market. When the trends are healthily moving in an upside direction, it tends to form two pullbacks. then resume its up move. So a high 2 in a bull trend is an ABC correction where the first leg is A and the change in direction is B. Means you can see this is leg A of correction, then this is leg B, which is high 1 and it got failed. Then at the end it forms a wave C, okay, which is second pullback, and from here you will gonna see a high 2 entry, which is very good and reliable for trading in the direction of up move in a healthy trend. So these two we have understood. Now we will understand its live example on charts, that how it will gonna look like, because this is just an illustration. We need to understand what are the characteristic of this structure on real charts. So you see here, this is a 1 day chart and it shows high 1 buy entries very reasonably. Earlier we have had this big downtrend. After that we have started a very good bull up move with momentum bars in this leg upside. Then it formed a pullback and we didn't know that this was just a pullback, because this can move down like this also. So finally, after these two candles, we saw that this is a swing low formed here, okay, and it offered this one as high 1 entry here. You can see in this up move, this candle failed to break above the previous candle's high, and this candle breaks the low of the previous candle. So we can say that this is a pullback going on. And again, this one also did not break above the previous candle's high. This one also did not break above the previous candle's high. But look at this candle. This candle is second most bullish candle formed up here, because the market dropped all the way down here, but buyers came in at the end of the closing and it closed at the top, or you can say it has closed the candle at its high level. So the candle is second most bullish candle in the candlestick patterns, and this red color candle has broken above the high of the previous candle. So we can say this is a high 1 entry generated, because you see this is the lower low, but this has formed a higher low. And then again this high 1 has confirmed the entry in the direction of the uptrend. Alright, so it moved this much, a very good move for a scalp or a short term trade, because this is a day chart. And then it started to form a deep pullback. Deep pullback is like this, okay. So in deep pullback you are seeing this one as the highest high bar, and then it started to form a pullback, and none of the candle has crossed the previous candle's high till this red color candle, and we have seen a double bar reversal in this green color candle, but still it has not been able to break the previous candle's high, but this candle did. So this is the entry candle according to high 1 scenario, and this has moved very good to the upside initially, then formed a pullback, then again a second opportunity for high 1, it moved up, then a doji bar, then it again moved up, a brief range, and you can see here again a high 1 entry, then moved up, then a small pullback, and again this high 1 entry. So high 1 entries are an opportunity to trade for short duration but ride the uptrend till its end. So you can see here again these high 1 entries are generating, but you can see on this chart that this trend is very much bullish. It is robust up move with very brief pullbacks and very good momentum bullish bars. The size of these green color candles is very satisfying, and they are showing a great momentum in the direction of buyers. And here you will see a deep correction. A deep correction because of heavy selling in this candle, and it formed a bigger correction here because we have seen leg 1 pullback, leg 2 pullback, leg 3 pullback, and then leg 4 up. So at some time the market will gonna form a two leg pullback, ABC correction, because this is just high one going on. There is no ABC seen from this point. So it might form a ABC correction now because this is pretty much extended uptrend. So do not initiate high ones at pretty much extended uptrends. See for bullish candles structure that are showing good strength in the trend. If the candles are showing a reasonable weakness in its up move, then you should avoid buying the high one entries. Like you can see here, these up move candles, these small candles are not that much satisfying. The momentum is not there. These candles are showing that in near term the trend might get exhausted, or it will gonna reduce its speed or momentum for the upside moves in the upcoming future. So look for these candles. This is a very good momentum bar which has triggered one more leg to the upside, then again one more leg to the upside, but these candles are showing a little bit of weakness. So we need to know that how old a particular trend is. We do not want to buy the extended highs, okay, because at extended high we might see an ABC correction. Similarly, let's see high 2 entries, how high 2 entries are forming on this particular chart. You see, when the trend started from this point, this is the low, okay, this trend has started, it formed a pullback, then here we are seeing a simple high 1 entry on this bar here, then again it moves up, and this is again a high 1 entry, and reasonably this is high 1 entry only, because there is no two pullbacks, there is only one pullback. It moves up, a pullback, then this high 1 entries are going on, okay, there is no deep correction going on. But you see this pullback, it has moved down below, these are some inside bars going on, then a down move. None of the candle is breaking above the high of the previous candle, but this candle did. So this is a high one triggered, but in actually this one was a second attempt to break above the previous candle's high. So we can say this is an high 2 candle. One high 1 has failed and this second high 2 has started here, and it has given a very good up move after a small retest. Here also you can see this is a high 1 entry in this pullback, then again the pullback extended the second leg down, the C wave, and it broken above the previous candle's high again. So you can say this one again is a high 2 entry here, and it moved up. So after 4 high 1 entries, the market went for a deep correction, an ABC wave correction, which has given high 2 entry here, and this is a healthy trend. We can say that one leg up overall on the higher time frame, a deep pullback, then second leg up. Okay, so there are waves within waves going on, trends within trends going on. You need to understand multi-time frame analysis, which we have covered in the previous video, to understand how the degrees of trends work. Okay, but initially you see we have 4 high 1 entries, then we have a deep pullback, then again high 2 entry worked here, then some deep pullback again, and it moved for the final leg to the upside, then it went into a very deep correction. So this is how these high 2 entries will gonna work, and this is a healthy trend. Okay, we have a channel resistance and we have a pretty good trend line support going on. So this is a healthy trend, and in healthy trend you will see some short-term high 1 entries and major pullbacks will gonna offer you high 2 entries. In the downtrend, how low 1 and low 2 sell entries will gonna work. It is very much similar to the uptrend concept only. It's just instead of high 1, when we are trading in the direction of uptrend, so the high 1 entries are forming, the current candle is breaking the high of the previous candle. But in low 1, we are trading in the direction of downtrend, okay, original trend. So we need to see that which candle is breaking the low of the previous candle, because the pullbacks will gonna be on the upper direction, and in uptrend the pullbacks are on the downward direction. So we need a low one entries for short sell in the downtrend. So let's see how they will gonna look like on this chart. Okay, so you can see here we have started a downtrend from this point and it started a pullback. Okay, the pullback is going on. So this is the lowest low candle here. None of the candle is breaking the low of previous candle, but this candle did here. This is the signal bar. Okay, so you took your low one entry at this bar and you have short sold. So it moved down and given you a very good down move in the direction of the downtrend, original trend. Then it again went into a pullback on the upside. So here it has broken down and given you low one entry, but it got failed. For initially it moved down, but on the second attempt, this is A, B and C correction like this. So this is C correction ended here, and then this candle has given you a low 2 entry. So it moved beautifully to the downside. So we have had some low 1 entries in the previous legs, in this leg, low 1 entries, but then the market went into a deeper pullback before moving further to the downside. And then you can see up this downtrend and low 1 started again. This low 1 entry, it moved down. Alright, and this is reasonably healthy trend. So there are some short-term low 1 entries are going on, and there will be major pullbacks will also gonna be there. So these pullbacks will gonna offer you low 2 entries. So I hope you have understood the concept of high 1, high 2, low 1 and low 2 perfectly. Now we will gonna discuss about a one step ahead in these concept, which is high 3 wedge push up or down setup. High 3 entries are called as wedge setups. They will gonna look like as wedge structure. So let's see how these high 3 entries works. We have a reasonable uptrend, then this is the highest high candle formed before first pullback, and high 1 entry has triggered here, but it got failed as we have discussed in high 2 concept. So again a pullback. This pullback offered you high 2 entry, but as we are discussing, it got failed again because the market is going for an very extended pullback. A very slow and extended pullback is going on, and this high 3 entry has triggered here. So this is the real entry in the extended pullback, because when the uptrend is very weak, you will gonna see high 3 entries only. In robust trend, you won't see high 3 entries. Otherwise, that is not a robust trend or a healthy trend. High 3 entries will gonna be seen in wide bull channels only. So when the market is moving very slowly and very weakly on the upside, it's just the direction of this trend is very much to the upside and wide. So this is weak uptrend. Here the sellers also can make money and the buyers can also make money. If sellers had short sold at this level, they can book their profit around here. So both of the players can make money, and it is a weak uptrend. So in weak uptrend, buying this high 1 and high 2 does not make any sense. This is the most important rule that you need to remember. In which kind of trend you need which type of entry, and if you do not know what are trends and how many types of trends are there, you can go and see the previous video we have covered, so you will understand how market phases and trends work. So moving ahead, this is high 3 entry, and high 3 entry is always gonna be a wedge push down. See here, these 3 push down are going on there. The market is trying to break below by attempting 3 times on the lower side, but it failed to do so, and the structure looks like as a X. This is an X forming, right? So this is a wedge structure, and simply if you just know candlestick patterns, chart patterns, then you will know that this is just a simple wedge. But counting these bars will gonna give you logical reasoning in reading charts. So see this example here. We have a pretty good uptrend going on. High 1 entries are there, but they are not giving us too much of an up move, and the market went into a extended pullback. Okay, so this is highest high candle formed up here. Then the market started to move a little bit to the downside. Okay, this has given you high 1 entry at this price, but it got failed and we have registered a new low. Then again a high 2 entry has formed up here, which got again failed, and the market registered a new low below this previous low. And then finally we have a high 3 entry here, and you can see how this high 3 entry has moved up, continued the uptrend. So this structure is overall looking like as a wedge push down. So these 3 push downs are there. Alright, a high 3 is a wedge bull flag, and a low 3 is a wedge bear flag. A high 3 can be a triangle formation also. We will understand its variation in next few charts. But high 3 can be a triangle, can be a bull flag or a wedge structure. But if these candles are fulfilling the condition of high 3, then you do not need to focus more on the structure and just focus on the rules it is fulfilling. A high 3 is this one. Now let's talk about what is high 4. So high 4 is not a pullback. High 4 entries are just bear channels. That is no longer a pullback. It will gonna be a bear channel, and itself that particular bear channel is a downtrend on short time frame. So that is a bear channel. All right, and we still have some bullish movement from a high 4 structure, but that is not compulsorily true. We might or we might not get a spike from a bear channel. It might continue its down move and form high 4, high 5, high 6. We do not need to count after high 3, I think, because that is a different structure going on that particular chart. That is a bear trend or a bull trend itself. Okay, and there is no high 5. If the market forms one, then it's a new trend. Let's say a high 5 has formed up like this. Okay, so this is no longer a pullback. It will become a new trend in itself. Okay, see this structure. This is showing us high 4 entry. Okay, so you can see this is high 1, this is high 2, which got failed again, this is high 3, and this one again has given a high 4. So this is a breakout from the bear channel. This is a bear channel, and if you look this particular channel trend on lower time frames, then this is reasonably a very good downtrend. Short sellers can only make money in this bear trend. So the logic for trading these high 4 entries would be waiting for break of this channel plus the break of previous swing high, and which is not part of this bar counting structure. Till high 3 candles we will count the structure of pullback. See this example of a triangle in a high 3 buy entry, and we have very good uptrend started from this point. High 1 entries are going on, multiple high 1s are going on. Then we have seen one high 2 entry at this level, moved up, then it failed and it moved down for a big pullback. Then high 1 entry has started at this point, okay, which got again failed and formed a new low around this demand zone. This is high 2 structure, moved up a bit, then again it failed and formed a new low, and then it given us high 3 entry and which gave a breakout above this overall triangle structure or a wedge structure. Alright, and it has resumed its uptrend. But if it forms a high 4 entry like this here, then it's no longer a pullback, it will become a bear channel. And you know in which type of trend you need to use high 1, high 2 and high 3. So to buy in high 1 you need robust trends, okay, and then to buy in high 2 entries you need healthy trends, and in weak trends you will often gonna see high 3 entries. So this is how you can know the end of a particular pullback, and this is the most simplest and logical way to understand and trade using these counting methods. So I hope you have a pretty good understanding of how these high 1, high 2 and high 3 and even high 4 entries work in the bar counting pullback trading strategy. Always backtest before using these strategies on different currency pairs. So let's outline some rules that you need to establish before using these bar counting pullback trading strategy. So the first one is to identify the trend direction, then look for a pullback, and once you have identified a pullback, just decide which kind of trend you are trading. It is the strong trend for the upside or downside, or is it a healthy trend, or it is very weak trend. If it is strong, then look for high 1 healthy, high 2 weak, high 3 entries. Okay. Then third one is you need to understand candlestick structure. There are some candles which have higher significance, like doji candle forming at the low of the high 1. So the signal bar is a doji bar. Then it will gonna be very good. Or is it a bull hammer candle? So these important candlestick will have a very higher significance. Then look for volume. So these pullbacks will gonna need low volume, and uptrends will need, means the higher original direction trend movement will need high volume in them, but these pullbacks needs low volume. If those pullbacks have high volume, then you have to be a little bit cautious, because that can be reversal, a major reversal. Okay. Then the fifth one is you can add price action confirmation in them, because understanding of basic price action will always gonna help you avoid taking unnecessary trades which do not fulfill the trade logics. And then sixth factor is add a indicator, because indicators can help you have a second opinion and confirm your trade logic. If that particular, like RSI or stochastic, is also giving you same signal which you have analyzing, then it will gonna be very great. And in the last, always use risk management parameters. Risk management parameters like position sizing, using good risk to reward ratio, and always sticking to stops and target levels, because that is most important thing to do. Even if your strategy is not having that great of accuracy, if you are using perfect risk management rules, then it will not gonna let your account blown away in single trades. Okay. And at the end, whatever rules you have created, backtest it before you move into live markets. Just backtest it, that on which currency pair this strategy is working well, and on which time frame this strategy is working well, and what will be your risk parameter, means how much risk you should take in this particular strategy. Okay, so after backtesting it, you should move onto the live market. with real money. Alright, but before backtesting, you won't have that much confidence in this particular strategy, and any trader would need good confidence in his strategy to trade perfectly and fearlessly without having that much of emotions. So that's all for this video. I hope you have understood it perfectly. Make sure to subscribe to our community channels to stay updated, and Tribe has initiated some very good offers, so you must visit tribe.com to know about these offers and register for it. Thanks for sticking around. If you found this video helpful, there's plenty more to come in our series on Forex and technical analysis. And don't forget, for all your trading needs, visit tribe.com. For more in-depth trading education, head over to tribehub.com. Thanks for watching, happy trading, and I will see you in the next video.